Good afternoon, guys. Welcome back to Talkaholics. Remember, if you guys are through our TikTok, actually, we cannot see you guys through TikTok. It's going to be again in More Ways Jose's TikTok Live. If you guys want to join us there. Today, we have a special guest. Our guest is Ruby. She will be talking about credit. I know that a lot of people have been talking about credit and what is credit. How can we, get our credit better? What are the major components about credit? But before we begin, Ruby.
Hi, well, thank you for having me, Jose. And yes, like you were mentioning, credit is one of those things that affects almost every part of your life. And nobody really ever sits down and talks about, it teaches you, what is credit about? Like, how do you manage your credit correctly? How do you take care of it? And we end up learning the hard way.
Yeah, we do. So I know that some of the questions that some of our listeners were saying last week was all these accounts or all these platforms that usually help us for credit. They were saying they give kind of a snapshot of what credit is, right? And then it does break down somewhat what credit is. And I know that some of the apps that they were talking about was Acorn. I don't know if you know if that actually affects our credit or not, or does it help with credit. Credit Karma was a big one, and the reason why they were saying this was for that same reason, right? That they were saying that this is kind of like a snapshot of what credit we have, and it kind of brings down a little bit of an educational about it. It talks about some of the concerns that affect your credit, right? But obviously, I'm not a credit repair specialist or a credit specialist. You are. We would like to know, what do you see, or some of the mistakes that you normally see, that people do. And I know that sometimes people go into consolidation loans and all these things to fix their credit, but sometimes they end up going into a deeper hole. And this is something that we talked last time, where basically it's more like a snowball effect, right?
Absolutely. No, well, I love those questions, and you're absolutely right. These apps do give us somewhat of a snapshot. However, do we understand those snapshots?
No.
That's the biggest issue, that we don't really understand those snapshots. And yes, we can look at our credit score and we see, okay, our score is at a 500 or 600. However, why is it at a 500 or 600?
Okay.
And what do I have to do to get there to the 700s or to just improve overall? And if we just had a more deeper understanding of the components that make up your credit score, we would actually be able to manipulate our credit score.
Okay.
But that's the major part or component that we are lacking. Nobody teaches us this. Me coming from Latino background, my mom and my dad did not know anything about credit.
Yes.
Therefore, obviously, my grandparents didn't either. I have never, ever heard in any school system anybody talk about credit.
No.
They don't teach you about credit.
They don't. And I know that not that long ago, actually, recently here in California, I think that's they're going into law. They're going to actually teach now a little bit more about financial service, not financial service itself, but about finance, right? And obviously, I feel like one of the biggest things that they should be teaching is this credit, right? Because yes, you're definitely right. I feel like majority of Hispanics, they have that mentality that it's no, I have it cash, I can pay it cash. But unfortunately, we live in the not state. We live in the country where basically everything is about credit. You want to buy a house, your credit affects it. You want to buy a car, credit affects it. Anything that has to do with purchasing something big, your credit 9 times out of 10 is being affected by all these, I guess, mistakes that we have.
Absolutely. And not only that, it's not just your car that you want to buy, it's going to affect you there. Not only the housing, also in some employments, a lot of people don't know, but if you actually want to be, just an example, like a police officer, they actually are going to check your credit. I've had to make letters to people that are about to become officers or police officers, and I have to write a letter saying that they're working on their credit. It also affects your business opportunities, so there's no way that you can actually get business credit without having a good standing personal credit.
That is true. I can testify to this. before I had really good credit. I'm not saying that I don't right now, but before I had really good credit, and basically, it opens many doors for you, right? And not saying that if you don't have it, like it doesn't open the doors if you have a good monetary amount that you can use to your disposition, but it does help you a lot whenever your credit is like in good standing. And some of the things too, something that we would like for to know is like what are some of the major components of credit?
Beautiful. I love that question because if you understand the components, you're able to pull the strings. You're able to manipulate your credit score, and therefore, you're always going to have a good credit score. So, I like to break it down in like really simple terms. Okay,
Okay.
the biggest component or factor that affects your credit score is your payment history.
Okay.
That makes up 35% of your credit score, and that is the biggest one. That alone affects so much. Like, you don't even know if you're ever late, just one late payment, especially if it's your first one, you will lose anywhere between 100 to 180 points alone.
That's a lot.
And that late payment stays on your report for 7 years. All right, so it's going to haunt you for 7 years, and the first two basically make the biggest impact on your credit score. So, what does this mean for you? That once you have a late payment, you lose all those points, you're not getting them all back just because you got back on track the next month.
Yeah.
Okay, so that is the biggest one. The second biggest one is going to be your utilization.
Okay.
That makes up 30%. So between those two, it's 65% already of your credit score.
Yeah, it's more than half, right?
Yes. So what does this mean? If you have a credit card and that credit card, the limit is $1,000, we tend to think that, oh, we have $1,000 to go and spend. No. The moment you go above the 30%, which in this case would be $300, the moment you go above that, you lose anywhere between 40 to 60 points.
Okay.
So imagine how much they're judging us on the way that we make our payments and that how much of our credit we use.
Yeah, they judge you a lot. So what you're saying basically is like it's easy to go high, and actually get that credit, but it's also super easy to basically get some deductions, like but some points, negative points, right? And those negative points, it's harder for you to actually get them back because kind of like what you said right now, some of these have a rule of like 7 years. So majority of our listeners or of our audience, I've heard it too as well. This is like and this is not new, right? Has been for forever, basically.
Absolutely, yes.
So a lot of people, tend to go to, and I feel like this is also like in the Hispanic community. They start their quote unquote credit on like department stores, or like and I'm gonna say it myself. I got one when I was young because I was like, hey, like Curacao, right? Hey, that's the best one. Like, cause you were like, that was the first card. I was like going crazy. I thought I was a baller. Got to that place, and then years later, came to find out they're like, yeah, that's just in-store credit. So it doesn't help you for anything outside those stores. So we tend to like follow the lead of other folks that come to like in our lives. Let's say like our parents, right? My dad, before, he was the type of person that anything and everything he would pay cash, right? And he's like, I don't want to owe anyone anything. So until a couple years ago is when he started actually using credit, and then I kind of helped him a little bit as well for him to understand how credit is used. One of the tips that I got when I was way younger too was that okay, if you have a card, let's say same like what you said, right? The credit utilization, do not pass 30%. But the other tip they gave me was like use it as a debit card. So whatever you have, you purchase it, and then before the month hits, before that interest will hit you, pay it off, right? Is that something that you recommend, like our listeners?
That is the best advice that they could have ever given you. So, yes, credit cards are not free money. So, never think of your credit cards like, oh, I get to go spend it on something that I can't afford.
Yeah.
Absolutely not. Your credit is a tool. And by a tool, I mean you have to learn how to utilize it so that it can benefit you for whatever it is that you're trying to do in really important transactions like your home, like your cars, things that really matter,
Yeah.
versus going and buying the purse. So, yes, once you get your credit card, yes, use it under 30%. And then when it comes back to when you're paying it, yes, absolutely. I tell people, what I do is I coach people on how to build their credit or rebuild their credit, optimize it. So that's exactly what you're going to do. You're going to go ahead and use it for stuff that you're already buying, for example, your gas, yeah, or your groceries or your bills. That's what you're going to use it for. And it's just going to be an extra step. So instead of, just paying it directly through your bank account, you're going to use your credit card, and then you're going to use your cash to pay your credit card.
Okay.
If you learn how to master this and you learn how to pay it before the month ends or before the statement closing date, you're never going to pay 1 penny in interest.
Nice. So, I mean, that's like super important, right? But I know that sometimes life happens and then you actually do, let's say you cannot do that payment, right? So this is where, budgeting, kind of like when I always tell my audience, right? Budgeting and knowing how much you can actually utilize, and don't purchase things that you're not able to pay later on, right? Yes, it's nice to have the newest phones. It's nice to have like the newest watch, the Meta glasses, all these crazy things, but do not live above your means. Basically, if you cannot afford it, don't put it on a credit card, because that's when things start piling up, and then you might get to a point where like unfortunately, like a lot of people happen like in 2020, right? A lot of people, they went into debt, and then their credit was affected tremendously because, again, one, they lost their job. So like all of these habits that they had before of purchasing things either with the credit card or debit card, wherever it was, it affected their credit, right?
Absolutely, big time. Almost everybody right now is still trying to recover from that. Many of us were on that boat because of what happened in 2020. Oh, yeah. Everybody lost their jobs. What happens? First thing, we panic because they didn't get the checks immediately. So what happens? We go and we used our credit cards to buy all the stuff that we needed and to pay our bills. Meanwhile, however, we still weren't having income coming in. There's a lot behind that as well. We'll touch that later on or on a different occasion. But there were laws that protected us from these creditors and predators, dinging our credit or putting stuff on there. Actually, it was not even allowed during COVID time to have a late payment put on our credits.
Really?
Yes. Well, we'll go there another time.
Yeah, we'll talk about that later on too. So as of right now, we talked about basically two of the major components, right?
Yes.
Which was the credit utilization and then the payment history.
So the way you pay.
Yeah, the way you pay, right? What else is another component of it?
15% is going to be how long you've had your credit.
Okay.
So if you ever want to be in the 800s, just know right off the bat that you have to have accounts open for 10 years or more.
Oh.
So all of the credit cards that you opened from the beginning, they have to be very intentional.
Okay.
Meaning that you are planning on keeping that 10 years from now, that you see yourself with that credit card. So that's why it's important, going back to what you said, the Curaçao and all of those, is that you usually don't plan on keeping those for that long.
No, they're like, that's what they call the starter pack, So it's like, I know also that whenever, before, right, when I was younger, way younger, the credit cards that I used to get, like I said, department stores and stuff like that, and then obviously because I thought that it was okay, I opened it, so I'm making, I have way more credits, right? So that's another component, right? How many cards or how many credit lines you have open, correct?
Absolutely, yes. So you always want to have anywhere between 2 to 4 positive, good standing accounts in order to have good credit. The more you have, the better. And people are like, no, Ruby, I don't want to know anything about credit cards. And I'm like, hold up, time out.
Yeah.
Who said you had to use them? Who said you had to go get in debt? Just because you have all these credit cards, it doesn't mean that you're going to go and buy stuff that you can't afford.
Correct.
You can literally just use it to go and I heard one of my clients say the other day, they taught me the burrito rule, and I was like, the burrito rule? What? I've never heard of this. And she's like, well, she was like, no, well, basically what I heard was that you use your credit card to go buy a burrito and then you pay it off. I'm like, oh, okay. Perfect. Yes, I love that rule. I'm going to start teaching that to kids now. Yeah. That is the perfect one. So, yes, I lost my train of thought. I'm like over here, all thinking about the burrito. I got hungry.
Yeah, hungry
No,
too.
but yes, you have to be very intentional with the accounts that you open. All the accounts that you get, you want to have them 10 years from now, and that makes up 15% of your credit score.
So what do we have right now? 65 plus 15. That's what? 80.
Yeah, I'm bad at math. That's why I fixed
Yeah,
credit.
80. It's 80%.
That's
So
80% right there.
yeah. Okay. So after that, what?
After that is your credit mix. However, that comes naturally.
Okay.
You're not going to go get in debt just to have a mix. And what is the credit mix? That is like having credit cards, a mortgage, car loan, everything that comes naturally in life.
Gotcha. Okay.
All right, but it doesn't pull the strings like your payment history and the utilization. Okay, and if you ever want to get to the 800s, your account history. So the age of all of those credit cards, and the other 10% is the new credit. So that's like a very thin line, and thankfully that's why they're 10%. You know, if you go and you apply for something, you get an inquiry, your score goes down.
Gotcha.
However, it won't affect you if you actually got approved. It'll actually be beneficial, and you won't get those scores or those points down.
So good thing you brought that up, right? Because like this is something that I talked to one of my folks on one of these episodes. That it's like when people go or tend to go to let's say like a dealership, right? They go to a dealership and they're like, okay, I'm just gonna submit it, and they know already that their credit score is like super low. Every single time, and correct me if I'm wrong, right? Whenever they go in and they try to submit the stuff, it's usually like within a span that it's not that it's like like a freebie, but it's like they know that basically they're looking out for something, right? But when it starts affecting them more, it's when they start doing it. Let's say continuously, right? They're going to a different dealership because they think they're gonna get a better credit, or they're gonna have better credit with another lender or with another company, but actually it's affecting them, right?
Absolutely. And you don't have to go to two or three. If you go to two or three, you're really going to regret it. So, what happens at a car dealership? You say, don't run my credit. A lot of times they still do.
Yeah.
Or if they're like, hey, Jose, can I run your credit just once, just to see if you're approved? And yes, they do run it once, but what they fail to tell you is that they're going to send it to 20 different banks. So then you get 20 different dings in one place, then you go to another. I've had people with over 100 inquiries.
So what's the difference between a soft pull and a hard pull?
Very good question. The difference is that a soft pull, that's whenever you review your credit. So, for example, you ask the credit bureaus for your credit reports, or you go into apps like Credit Karma or Smart Credit or all of those that are out there, and you review your credit reports.
Okay.
There's no financial transaction. And those are not recorded on your credit report. They don't affect you that way. And hard pulls, those are the ones when you go and you actually want to buy a car, a house, or there's any financial transaction involved, such as credit cards or leasing a place. Those are the ones that affect you, and that's the difference.
Gotcha. Okay. So what's the difference between, because I know, like, and this was one of the things that one of our listeners actually contacted us. What are the different bureaus that actually because I want to say there's like three main ones, right? That are the ones that they kind of like combine that score for you to get like an average of what your actual score is, and then follow up question to that one. What is a FICO?
Beautiful. I love that. That is one of my favorite things to teach because you would be mind blown. So the three main credit bureaus is going to be Experian, which we all know, TransUnion, and Equifax. Those are less known, but all three are just as important, and they all count towards our FICO usually. So it's going to be those three, and your FICO is something totally different. There's actually two scoring models. One is FICO, and one is Vantage. So these are scoring models, meaning that it is customizable and it's going to be different wherever you go. Your FICO at one dealership will be one, at another dealership it'll be different. When you buy a house, it's going to be another one. For the credit card company, it's going to be another one. Why? It's a scoring model, meaning that they get to decide what they're going to judge you most heavily on.
Gotcha. So it's like a pick and choose for them, not for you, but for them. What is it that they're going to be taking into consideration? What's more important to them? And then they're going to base off that your score, or like what will be that score for you if they take into consideration those specific items, I guess, that they're the ones trying to consider, correct?
Yes, and they usually weigh it most heavily on either your payment history, so that's why we watch out. We don't ever want late payments, ever, on anything. Whatever you can do to avoid that, a minimum payment is better than nothing because then it'll affect your FICO in a great way. So they get to decide if they're going to judge you most heavily on your payment history or on the amounts you owe.
Okay,
And it's always to their advantage because how do these institutions make their money? With the interest.
gotcha. So then, going back a little bit to whenever you were saying about the not the FICO, but like those three bureaus, right, or those three agencies, I guess. So, do each one of them do they represent something different, or is it just like it's just a company that they're like, okay, this is a kind of be the same thing, right? Like, okay, they would just take into consideration more this than that because I know that I've seen too, like on my scores, that they vary, right? It's like
Yes.
they're not all the same. You look at one, and let's say one of them says like 750, the other one says like 748, another one says like 760. So you're like, wait. So obviously, like you want to go for the highest one, but that's not how it goes, right?
That is not how it goes. They do combine all three. A lot of it just really depends. So wherever you go, they have different rules, and some of them might even have different bureaus. Maybe they don't like to work with all three. Maybe they just like to work with one or with two.
Gotcha.
So those are the differences. And yes, and matter of fact, you might even see that your credit score is 700 and something on Credit Karma, and when you want to go get a car, it's 500, and you're gonna be like, what?
Yeah.
How is it 500? No, look at my Credit Karma, it's 700. Well, they get to decide what they're going to judge you most heavily on.
Gotcha. Yeah. Um, so then another good thing that I've also heard too, and this I actually did personally, right? To some of my friends and prior like acquaintances, I know that whenever they were younger, they didn't have obviously like a credit score, right? Because you get a credit score like a real credit score, right? Passing 18, right? Is that correct?
No. You can actually start your kids' credit score since they're teenagers or younger.
Okay.
So, yes. However, what is the difference? Why do some have zero? I've had people come to me with a 0.
Mm-hmm.
And not because they did anything wrong, it's just that they never started any credit.
Gotcha.
So, your credit score starts whenever you start credit. So, for our kids, we add them as authorized users and they start gaining that payment history and all those positive accounts
Yes.
on their name.
That's exactly what I did. I had at that point a credit card, right? And it was when I was closer to the 800s, right? Or a little bit over 800s. So these two girls, like one of them was 15, one of them was 16. We actually put them underneath my card like, as a authorized user, and their credit score whenever they were already 18 and they started, their work and all that stuff. They were my family members. So they basically got to a point where whenever they started actually utilizing or applying even for like themselves for a credit card, like it was so easy for them. It was easy because somebody gave them kind of like that push. I just had a conversation today at the dentist, because like yeah, one of the nurses there, she was actually telling me right the same thing that we were talking right now. A lot of us Hispanics, we have or we tended to basically either be misinformed or not informed at all, right? So it's not bad to allow somebody to like if they want to do it, especially if they're your partner, to help them out just a tiny bit. I know that sometimes our egos are like, nah, I don't want to do it. I want to do it by myself, but it doesn't hurt you, right? Whatever doesn't hurt you, it's good. If it's something gonna put you in a predicament or something in the near future that could be something bad for you, then maybe yes, abstain from doing those things. But if it's something to do like kind of credit, my advice would be like, hey, take it. Especially if that's your partner, because at the end of the day too, let's say that you decide to if you're a boyfriend and girlfriend and you decide to actually later on buy a house. So now you're actually a partner. So your credit score is going to affect his credit score too, because now the eligibility for both of you guys, maybe he has really good credit score, but then if he wants to put you also like on the title or something like that for that loan, now because of yours, the credit does affect also the rates, does affect the payments, anything, right?
Absolutely, the interest rates, the how big or how small your payment is going to be, it affects everything. Even how much down payment you have to put, it affects everything.
So why does it affect it?
Okay. It affects it. I'm going to go back a little bit to what you were saying in regards to the authorized users. Yes, it is a really good way to start your credit. It is amazing. However, we have to be very careful. If you're gonna put me on a credit card that's maxed out and you don't pay consistently on, it is going to destroy your credit. So don't just go around asking for somebody to add you as an authorized user to whoever. Very specific. It has to be somebody with really good credit, and you don't have to get a credit card to be an authorized user. You just want to leverage their good payment history and their good habits to reflect on your credit.
Gotcha.
Okay. And then now going back to the house, yes, it's going to affect your payments. Of course, I'm not a realtor or a lender, but I do have many realtor and lender friends, and I learn a lot from them. And I have always heard that depending on your credit score is the amount of down payment that you're going to put down.
Yeah.
I'm like, what? And one time I had one girl tell me, because all lenders are different. So, mind you, the what I'm talking about right now, it could be for one lender, and then for another, it's nothing the same.
Yeah.
Some will even approve you at a 580, but they fail to tell you that you're probably going to pay $100,000 more dollars in interest. But I heard from one of my realtors one time. She was saying if you have an 800 or 750 and above, then your down payment is zero. I said, wait, you said what?
And do you think, well, obviously you know this, right? But I feel like this will be due to the risk that they're going to be taking, right? Because at the end of the day, it's like they're lending you that money. In return, they're going to give obviously something back. That's how they make their money. So I guess at the end of the day, it's like how much risk are you going to basically put up front for them?
Yes.
Because if they think that you're gonna be like a risky person and you might not even get anything, that's why they add those the interest higher, because they're like, okay, we're gonna try to get as much as we can from the beginning, just in case they default. And by default, I mean like they stop paying, they don't pay at all, and they just book it, right?
Yes, absolutely. You're absolutely correct. So yes, that is what your credit score is. It is a risk assessment. So they're like, okay, depending on Jose's habits, how much are we risking? How much is it that he's going to pay us back on time? What has he done before? So they judge you based on that. That's what it was really meant for.
Mm-hmm.
Not to destroy our lives, even though it does destroy a lot of people's lives and egos.
Yeah.
And egos. I've heard so many stories coming from men that they were like, they made me feel like I was not worth anything at X, Y, or Z place because my credit wasn't good, even if I had the money.
Yeah, exactly. And that's the thing too, is like some of these places, they don't care about your wealth. They care also about your credit, right? Because again, they're the ones either lending it to you, even if sometimes they're like, okay, I'm putting up front this much, they still gonna have some type of safeguard for themselves, because at the end of the day, again, it's their business, right? So they're trying to minimize that risk, right?
Yes, absolutely. That is exactly what they're trying to do. So basically, that's it. And it is not any of our faults in reality. I consider that all of us are very hardworking people.
Yes.
And however, we were just never taught. I think it always comes down to that. We lack the proper education and the proper knowledge in regards to all of this. I think it's just that. And once you learn and you can master credit, it becomes a really powerful tool.
It does. It does open, and this is something that even at any age, right? It does open a lot of opportunities for you and to you, and then to your family, because again, like I said, bringing back to my dad. My dad, not that long ago, I want to say probably within the last, 10 years, is when he started using his credit. And my mom, she's very savvy when it comes to stuff like that. Her credit score is also up there. But same thing, right? It was something also that does affect it. It's and you got to take into consideration as well, not just yourself, but whenever you become a co-signer.
Ooh.
Right?
Don't even get me started.
Yeah. So now we're going to the negative side of credit and credit utilization and credit borrowing, because at that point, that's what you're doing. You're actually letting somebody else borrow your credit, or the way that you present yourself with the company. Correct?
Correct. Don't ever, 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 ever co-sign for anything. I tell people, I honestly don't care if it's your mom, your dad, your brother, your sister, your boyfriend or girlfriend, unless you guys are married, then of course that's totally different. But don't co-sign. Why? They will never feel the impact of a late payment.
No.
They will never feel the impact, or maybe if they do, but they won't know that it's also affecting you and your ability to then get a car. What happens when you need a car? What happens when you need a place to live? What happens when you have a great business opportunity and you can't take it?
Yes. So another factor too that sometimes lenders and even like this also applies as well for like even people that don't even have a house, like people that rent as well. Like I can say myself too, when I started like renting, it was crazy because when I was way younger, yes, they would look at my credit and they'll be like, well, the security deposit is normally $500, but because your credit score is like low, now it's gonna be like $800, right? So I would be like, wow, like this is like that's messed up. But no, right? Again, going back to it, they're trying to protect themselves. But then now, obviously, I see it, and it's like, okay, you're trying to rent. Now they kind of like what you said, right? If they're above a certain credit line, same thing. They'll be like, nope, you don't even need to give a deposit, or the deposit is like like waived for that same reason, right? But it does affect if you co-sign or not, because again, before I never used to co-sign. I never used to do any of these things because I was like, you know what? It is my credit. It has taken me so long to actually get it up because again, when I was younger, I did do that. I was trying to be a friend to people, and I was trying to help them out. And sometimes people don't care about you, and they really don't. There's a lot of selfish people out there too. And I'm not saying that the people that I help they use me and abuse me, but that was my own doing as well because I was the one that had the I guess the responsibility and the ability to say no.
Yes,
right?
Absolutely, you did, but you didn't. And how does it affect you? Let's dive deeper into how does it affect you. So, if you're an authorized user, you're not liable. So, very clear, you can always get yourself off of those, and it's easy like that. A lot of people don't know and think that there's no way out. For authorized users, yes, there is. For co-signing, no, there is not. So when you co-sign for a vehicle and that person misses a payment, you're gonna get that payment. You're gonna get that late payment. If that person gets a repo, you're gonna get that repo. If that person gets a foreclosure, you're gonna get that foreclosure on your credit.
Yeah.
Everything they get, just like it benefits you, it also harms you.
Yes, and this goes back again to even like prior episodes that we had, right? Because co-signing also sometimes means like they're not even your partner, they're not even your family, they're not even this. And let's say I've seen a lot of cases where I get customers where like their friend co-signed for a house, right? So now they take into consideration that person's income, all their debt, all these things, right? And that's why they got the house. And then a couple of years down the line, they literally got into a fight, and then now that person is like, you know what? That house, half of it is mine. So they literally said like, no, it's not, brother. If you had him co-sign and you had him basically sign the dotted line that you were gonna use his stuff, it does belong to them,
It really does.
And it sucks, right? Because sometimes you do it or that those people do it because they want to really help you, and it's like if you do have like an agreement or arrangement, that's when you should actually they say something in Mexico, right? Papelito habla, meaning that anything that's in writing, it's what it is, right? It's written in stone right there, right? Well, not in stone, but in paper. You guys get it.
It's official. It's
Yeah.
official.
Yeah.
Like you can't undo it. That's what you signed for, and you agreed to it, and that's what you're stuck with. So yes, you are absolutely right. So don't co-sign.
Yeah.
That's as easy as that. I'm sorry. You can feel bad for somebody. Do not co-sign, especially if they're in a bad living situation. They don't qualify for a reason.
Yeah.
Red flag. Red flag. Like they're not qualifying for a reason.
Yeah, either they have been really bad with their with all those factors, right? So that should be something to determine. Don't get me wrong, not everyone that has bad credit they got in there like overnight. Sometimes things happen, life happens, and then there is people that sometimes out there that they were once at the top and they probably didn't plan accordingly. You know, there's people that were really good. They had their credit score like super high, and then all of a sudden something happened in their lives where it might have shifted. But if you don't have the I guess the foundation, or if you're not prepared prior to this, that's when it affects you, and that's when it takes you a little bit longer to go back up, right?
Yes, absolutely. And things happen. Like you said, I can actually talk about a client who was in the 800s and he did nothing wrong. This guy is really well off. He has all the money, he had all the money in the bank to do everything. However, have you ever heard that if you split the payments for like your car, it helps your credit? So he thought it was a smart idea to go and do that with his mortgage. He split the payments in two. And what ended up happening is that instead of saving him or making his credit go up, they were actually charging him more fees. So he was like, "What? Why are you guys charging me more? Like I'm paying two times in 1 month." Like, no, well, they want their money, so
Yeah.
they're gonna add something in there to make money. So he ended up saying, "You know what? Switch it back to just once a month. I don't want to deal with this anymore." And he undergoes surgery while he's in recovery. Mind you, he had to be in bed rest for quite some time. He's in recovery, and all of a sudden he gets a notice in the mail in red, big letters saying delinquent. I remember he called me and he's like freaking out. He's like, "Why am I delinquent? Like I tried calling my bank, and they're telling me that it's my fault because I switched to one time a month, and they were so mad that they turned off autopay."
Yes. So you brought that up. This is like a true story that happened to me, right? So something similar to me. This was a couple years ago. I actually was renting I had a apartment in Vegas before I came back to California, and my wife, she's listening to this right now. She's probably cracking up, but I've never had before anything like anything negative, nothing, and then because of that, somebody in the administration side, they switched off the auto pay, right? Something happened. I guess they got my name wrong. Something happened, right? I got an eviction notice. And it was like, I got home and it was interesting because like the area was not that good. So like, the other people that were like living around me, I was going to say I was a little better off than them, right? They were making fun of me. They were like, dang, the white boy got an eviction notice. They thought that I was a Caucasian. And I was like, what? So I thought they were playing a prank on me, right? So I'm like, ah ha ha, so funny. So I go to the administration office and I'm like, what's this? So they're like, well, you didn't pay. And I was like, yeah, I did. So I actually had to show them that I don't know why that month I was like, okay, I was going over all my bills and I was like, regardless if I had auto pay, I know that sometimes it does say too. If you already have auto pay, like if you make this payment, it will technically be like double, right? So I didn't care. Good for me, I didn't care. I made the payment and I showed them the proof. So that does also show up on your report because whenever we got back here, I got back here to California, and then me and my now wife, right, we were actually looking for like a place that actually showed up, and that was something that it was negative for me, and I was like, wait, what? So I was like, this is ridiculous, but something to be actually taken care of because even this applies to for other things. I know that like I have customers, and I'm pretty sure you guys have customers too. Like on the life insurance side, same thing. If they missed a payment or like they're like they missed it by like 1 or 2 days, automatically even if they have it in auto pay, it removes it, and the customer has to call the agency and basically be like, hey, I would like to go back again into auto pay. It doesn't go automatically. So people they again because we're already on automated stuff, we always think it will go back. Like, oh yeah, I would have it in auto pay, but they never go back and check their actual either their apps or they even like check like their bills. Because sometimes if you don't receive a bill, then all of a sudden you start receiving the bill. Most likely is because they're sending you a notification about something about your accounts. So it's very important to take a look into that, right?
Yes. Look at your statements.
Yes.
Look at your bills. Look at your accounts. We all know what credit cards we have, and if the payment didn't come out and we have extra money in our bank account, then Go check your accounts.
Oh, yeah.
Don't wait for that late payment to come in because it's going to ruin you.
Yes.
So for this person having an 800, he came to me at a 520. He was so embarrassed. He was like, I'm so embarrassed. I've been working in banking for over 15 years. I'm an older person, and now I'm trying to build an apartment complex, and I can't. I can't build an apartment complex. And I was like, oh my goodness. He tried calling the banks. Please don't call customer service. They're not going to help you.
Yeah.
The customer service is not the one in charge of adding, these things onto your credit report.
Yeah. So, other thing too. I know that going to like again a little bit more into like the negative sides, right? So I know that sometimes people they're like, oh, you know what? I have a bunch of debt. I want to clear it out. Let me do this consolidation loan, right? Or they're the ones that are trying to fight it themselves. Because I know that majority of the times, if you become delinquent in some accounts, right? Sometimes the creditor, they'll call you and they'll try to make arrangements with you, right? So this is where you need to be smart as well. And like, unless you're like super savvy about this and you know exactly what you're doing, go for it. But if you don't know, talk to somebody like Ruby that knows what they're doing and they actually talk to them as well because again, 9 times out of 10, they're gonna do what's best for the creditor. They're not your friends. Yes, they might sound like, oh yeah, we will help you, we will reduce it. They're not gonna reduce it. What they're doing is just the time frame that you were planning on paying it, they're just gonna expand it more, and then now it's gonna look and it's gonna feel like it's less payment or less of a payment, but you're paying it for way longer.
Yes.
Right?
Yes, that is absolutely what happens. Yes, these people are not your friends. They don't care about your credit. They care about the company that they work for and that is paying their bills. So don't talk to customer service. Always ask to escalate or find out who the people in charge of reporting to the credit bureaus are. Or come to somebody like me and I'm going to guide you or show you, or I can do it for you and I can go ahead and remove those late payments or do something for you. However, if you are going through financial hardship and you call them, there are laws. We as consumers have so many rights that we don't even know. We're not even aware of. We think that these banks and institutions are the greatest thing in the world. However, we have more rights than they do.
Yeah.
That we have more things out there protecting us from them that we don't even know. We're not even aware of all of these things. So if you call any of these banks and you tell them, hey, I'm going through financial difficulty, they have to do something to help you.
What if they don't? And this is talking for a friend, asking for a friend. what if they don't? Because I know that this friend had received a call, and I know that it was whenever like the wildfires were happening, right? And he lost his job because it was based on those locations. This is in the state of California, right? Last year. So a lot of people, and even like I remember like me and my bank was like saying like if you were affected by like the wildfires in California, blah blah blah, we have a relief, right? So this person got that call, and then they told him, hey, I got basically I lost my job, right? So because he already asked right before that, he didn't know obviously that there was going to be wildfires or anything like that, but he requested an extension, right? But because he requested that extension, and then now they're like, you're trying to take advantage of us, right? Even though this person lost the job because of the wildfires, and it was a natural disaster, it's not something that is like, oh, I just got fired because I got fired, right? So he literally got fired.
Yeah, he really
It was
did.
fired.
I don't see how he would be trying to take advantage of them by losing their job, but don't let any of these bullies in customer service, bully you like that. No, when you call them and you tell them that you're actually going through financial difficulty or any medical emergency, they actually have to try and do whatever they can and is in their possibilities to help you.
Yeah.
And if they promise you that they're going to help you and they don't, and you still get those late payments, listen up, people that are homeowners. If this happens on your mortgage, you have even more rights that protect you. Aside from the consumers, now you have a homeowners protections and laws that are there to protect you when these things happen. You are able to let them know what is going on and they have to do something. If they tell you they're going to do something and they don't, guess what? Now it's so much easier to remove all of those late payments and all that damage they did to your credit. Yes.
No, but it's true, right? It's like, and then obviously, the more knowledge that you have, the better that you're equipped to basically, not go against them, but at least have something to defend yourself, right? And then, yes, I know that a lot of people like to go to TikTok University or YouTube University, but again, these people and like kind of like Ruby, right? They take their time. They actually get certified. They go through classes. They go through all these things to help you guys to basically make it smoother for you guys, right? Because yes, unless you have the time enough to go out there and then do that research yourself, and then you'll go through codes, go through all these things. By all means, go for it if that's what you want to do. Yes, but I know that like majority of the times, people don't have the time, and then people want to have a shortcut, and then 9 times out of 10, that shortcut might not even apply to you. So then now you're in like a deeper hole. So again, and I know that I didn't introduce you really well at the beginning. I'm sorry for that. Is there any way that they can actually reach you? Do you have like if you want to give you like your socials, like like also like your phone number, and if they have any like consultation they can have with you?
Absolutely. Yes, you can reach out to me directly. You can reach out to me through Instagram. My Instagram is rubyred_28 or credit coach Ruby. You can reach out to me via text or phone call. My number is 951-902-0338. Or just shoot me a quick text.
Can you repeat that one? Just a
Yeah,
little bit slower.
of course. 951-902-0338. You can text me on there. You can call me on there. You can reach out to me through Instagram, again, Credit Coach Ruby or Ruby_28. On Facebook, like Ruby Torres. You can reach me out many different ways, and you do get a free consultation. I don't charge for you to ask me a question. Call me, ask me a question, and then based on your question, I might be able to give you a free credit analysis, sit down, and kind of give you your options on what can be done with what you currently have. So before I even charge you anything, I'm going to tell you what is it that you need, what is it that's going on, what are your options, so you fully understand and you can make a well-informed decision.
Gotcha. And even for the people that didn't catch it, again, you guys, I will tag her on the videos. I will make sure that whenever we do the post, we will put all her information there as well. And then again, you guys can even text us as well, and then we will give you guys her information. Just remember, our number is 714-360-3025. And again, also follow me as well at Instagram, TikTok, Facebook, YouTube. It's at More Ways Jose. And make sure you guys keep on following us in every Wednesday at 6:05 on 106.5. And also, if you don't have a radio nearby, on the KCAA radio app. Again, we will be going over more things like this, to help, our listeners. Ruby is an amazing person. Like, she has helped a bunch of people with these things too. And she's not the only one that does these things. There's a lot of people, but I do trust, Ruby, because again, she gets basically from the basics to wherever you're at right now. She helps you down, like, break down all the things and all the components that affect your credit and that have been affecting your credit, right? I know a lot of people too sometimes go to them when they're already in a shamble, when they were there like in that hole. So I would encourage you guys to basically start utilizing your credit correctly, or and if you don't know how to do that, still have a conversation with a credit specialist, kind of like Ruby. That way you don't get to a point where you cannot fix it, or that's going to take you way longer to fix it. We have had people as well that their only option, or they thought their only option, was going to bankruptcy. And this is something also that affects your credit, right?
Yes, it does. That bankruptcy will stay on your credit report for 10 years. However, if you have the hookup, if you come to me, then you can get it off anywhere between 6 to 12 months. People think that they have to carry that for the full 10 years. You do not. People think that they can not rebuild their credit because they have a bankruptcy. That is a lie. Bankruptcy is so tabooed. Like, people think bankruptcy is a taboo. I don't do bankruptcy, but I've just done my due diligence and have really dove in and talked with many consumer attorneys and just learned so much from them that now I know and I understand that bankruptcy is actually an ace under your sleeve. Know when to use it though.
Yes.
Don't run there just because you have collections. Collections, come to me. I can take a look and see if they qualify to be removed without you having to pay them.
Yes. And then the other thing too is that make sure that you guys, well, one, follow her. Again, if you want to give your socials, please.
Yes, so Credit Coach Ruby or RubyRed_28, that's for Instagram. Facebook, Ruby Torres. You can also contact me directly. My direct number is 951-902-0338. So follow me for more. Like, even if you have questions, like you said, even before you fall into a really deep hole, like once you notice that something is not right and it's not okay and you're going to start being delinquent, do something about it. Don't wait. If you're being sued, don't panic. Don't look for somebody that can help you, somebody that you can talk to. If you have collections, before you pay them, sit down with somebody. Before you do debt consolidation, please, whatever you do, never do debt consolidation. Ever go there. But before you do, or if you've been considering it, call me. Ask me why. Ask me why not to do debt consolidation.
Yeah.
So it doesn't matter what stage you're at, or even if you're at a stage that you're like, I don't have any negatives. I don't have collections. I don't have late payments, but I'm stuck at a 600 and I don't understand why. I'm a credit coach as well, not just credit repair. I can teach you how to build or rebuild or manipulate your credit.
Yeah. So again, right, all this information, and again, if you guys want to hear more about, Ruby, follow her, please. Send us a message, DM us, anything you guys want to hear later on. I know that we do listen. Clearly, you guys asked for a credit repair or credit in general, and we brought someone on the show. Anything else that you guys want her to discuss, if you want us to bring her back as well, let us know. What other questions is it that you guys have that want us to basically, answer to you guys? This is your show. This is the show is to educate you guys and to empower you guys to be able to understand all the financial services, including credit, how to utilize it. That could be maybe next time, another episode for us. How to properly utilize your credit, whether you want to open a business, whether you want to get a house, how you can manipulate it as well, stuff like that. Make sure you guys send us those messages. Let us know what you guys want. And until next time, any closing remarks, Ruby?
Yes. So more than anything, if anybody listening to this feels stuck or discouraged, it's not the end. Like, credit repair is not permanent. Sorry, not credit repair. Credit itself is not permanent. So your situation is not permanent. It can change. Don't be discouraged. Reach out to me, and there's so many different ways that I can help you. It doesn't matter where you're at in your credit, whether you don't have credit at all or you've really messed it up. Everything in between can be fixed.
Yes. One last time, what are your information?
One last time. My Instagram is Credit Coach Ruby, or RubyRed_28. You can reach me on both of those. It's the same one. My phone number is 951-902-0338. Again, 951-902-0338.
Alrighty, guys. And then remember again, follow us as well at Talkaholics 411, TikTok, YouTube. I think we have Facebook. And then as well, follow me as well at Morway Jose at TikTok, Facebook, Instagram, and YouTube. And until next time, thank you guys for listening. Have a wonderful night.
God bless.
God bless.
Yeah. Yeah.